Hey guys, welcome back. We are looking at your Gbpusd today. We are on, we've analyzed this pair previously in a previous video, and it's the exact same trade. As you know, I'm a position trader, so I actually look for and wait for the market to set up before I place trades. And more often than not, what I tend to do is place them and forget about them just in case, but have the strategy to not wait for it and look at the market 24 hours a day. What we've done in the previous video is look at the Gbpusd, and what I'm going to do is validate the analysis on this pair. Okay. All right, we're going to look at the monthly chart. The monthly chart says we're in a downtrend. That's your last ABC. Last AB fibs are we're saying we're in a downtrend. And if you look at this chart as it is right now, what you'd see is the market was in consolidation, broke out of consolidation, came back in consolidation, and is ranging again. Okay. At this point of ranging, you could see the market doing this. I've drawn a counter trend line, and it looks like it's breaking this counter trend line. Stochastics is heading downwards, so we're expecting this market to head down as well. It is in the overbought zone, so we're expecting it to shoot down. Let's move on to our weekly chart. On our weekly, it's obviously the weekly is a bigger, more candlestick version of a monthly chart, and it shows the same thing. So it tells the same story, just with more candles. The ABCD has been your first ABCD fibs established. We've drawn our next AB boundary. Again, as you can see on the weekly, the monthly chart was the same thing, where you are down AB, but then there's a lot of consolidation in this area. Okay, cool. Let's just zoom in on this consolidation. All right, this consolidation. If you look out throughout the history of this pair, around this consolidation area, this top right here, there's a lot of activity. So the markets seem to interact with this area quite a lot. So you can see it right here. And you can see it here. This came and it's here as well. All right, here. And we're at that point where it has interacted with it again. So you can see here that the market has interacted with that again. You can see this beautiful bullish shooting star right here, and this non-ideal. I say not ideal because if you look in your manual, you can see that you have your ideal evening star where it says, okay, here's a bullish candlestick, here's an indecision, and here's a decision candlestick formation. In this case, you have these two indecision candlesticks in between, so it's an evening star, but it's not your, it's not the best looking evening star. That makes any sense. Okay. We also have a confirmation of the breaking of this trend line. So in the last week, we could see, okay, this market has broken this counter trend line right here. Okay, so in our heads, in our hearts, we're looking for down moves. Our stochastics is heading down as well. So we're thinking, okay, we're looking for down moves. All right, let's go on to our daily. In our daily, we're in an up AB boundary. We're in an up AB boundary on our daily, and the thing with this up AB boundary is that it's hit some resistance, and if you could see here a cute little bearish crown forming right here. At that 2.7, which generally means that it's going to head back into our AB boundary. And we're guesstimating this market to come down to at least the 382 again. Okay. Okay, cool. We can see right here a cute little bear shooting star formed. Stochastics are in the overbought zone, and you know it's in a cute little down AB as well on this sub move. And now if the sub move holds and this bearish shooting star holds and gives us a bearish engulfing candle, we'll have a beautiful evening star, which then says, okay, we're definitely heading down, right? Okay, cool. All right, so we have several reasons why we want this market to go down, and on all the charts, they're saying the same thing at the moment. Okay, cool. Let's head down to our 120 chart. Okay. When we did our 120 chart, we looked at the pair that was in an up move, had taken out a previous AB. We looked at this chart and we said, okay, we're looking for down moves. We have a down ABCD, the A got taken out. We have another down ABCD. Now it's at past support, future resistance. And we're saying, because there's a lot of resistance at this area, that we are definitely considering taking this trade. Stochastics are in the overbought zone, and we're at past support, future resistance. Okay, and so what we'll do is put in an entry, at, let's dig in. Well, we could put in an entry at market, and our stop would be here at 15 pips above this 68.96. All right, that will be our stop right here, and our limit is 10 pips, so 65.93, and that's our limit. Oopsie daisy. Our limit is here at 10 pips above that 618 extension. Okay. All right. And if we put it at market, our risk on this trade is 83 pips, and we're going for 221 pips. Okay. All right. So we know we have good risk reward for this trade. All right. Now let's write down some reasons why we should bother with this trade. Okay. So on the monthly, we're saying that on the monthly, the market is in consolidation, heading down. Okay, so that's our reason number one. Okay, we're saying that oopsie daisy, it should be fun, right? I definitely know what I'm talking about. Oh, how quickly I can type. Also on the monthly, that I can spell monthly, honestly. Also on the monthly, the market is showing that it is breaking a counter trend line. Okay. On the weekly, this is confirmed. On the daily, the market is showing an up AB, but has hit a 2.7, which is a hidden level of resistance and is also forming a bearish king's crown. Great. Okay. And it's also in a downtrend on this one. On the 2-hour, which is the chart we're looking at, market is in a downtrend, and we're looking at a level of past support to become future resistance. Okay, so that's another reason why we are getting into this trade. One thing that's vitally important as well, equity management is good on this trade. We're looking at what, 73 to 220, which is 7, 14, 21, about 3 to 1 ish risk reward on this trade. Okay. Yeah, I hope this these are the reasons why I've gotten in on this trade. Let's put it up here so you can see. So the reasons I've gotten in on this trade. Yes, so on the monthly, the market is in consolidation heading down, and also on the monthly, the market is showing that it's breaking a counter trend line. The weekly confirms that the market is breaking a counter trend line and it's in consolidation. And we validated where where the market has consistently hit an area of resistance at that on that pair. On the daily, the market is in an uptrend, but at a 2.7, it's heading back down and is showing us a bit of a bearish crown. So we're expecting that market to move back into the AB boundary. On the 2-hour, we're doing downtrends. Yes, it took out a AB at one point, but it went back down into doing our down AB CDs. It's at a point of past support, future resistance, so we are expecting this pair to head down. It's good equity management, which is a 3 to 1 risk reward on that trade. So we're looking at an all-around good trade to get in. So I hope this video has been useful for you. And well, happy trading. Thank you for watching.